Hello and welcome to this video. In today's video, we will analyze Salesforce Inc., which trades under the ticker symbol CRM. On TipRanks, it received a strong buy rating from the analysts, and it is one of the most talked about stocks on different platforms and news portals. As a business strategist and problem solver, I will like to thoroughly analyze Salesforce as an investment and look at the numbers before investing in it. So the goal of this video is to share my unbiased opinion with you. So before going ahead, nothing in this video is a financial advice. I'm not a financial advisor, and you must do your own research before investing in any stocks or cryptocurrencies that I mention on this channel. So as a B2B sales expert who has closed several multi-million US dollars deals, it is natural that I would be interested in services and software technologies and tools that facilitate companies in building long-term business relationships with clients. So first of all, what is Salesforce? Salesforce is world's #1 customer relationships management CRM platform. They help the marketing, sales, commerce, service, and IT teams of companies in working together in a collaborative manner cohesively from anywhere in the world. So headquartered in San Francisco, California, Salesforce value proposition is centered on the customer relationship management CRM service. But this is not all. It also provides a complementary suite of enterprise applications geared towards customer service, marketing, automation, analytics, and application development. And in 2021, Salesforce was ranked second on the list of the 100 best companies to work for based on an employee survey of satisfaction by Fortune magazine, which in my opinion is a tremendous achievement. So currently more than 150,000 companies use Salesforce CRM to grow their business by strengthening customer relationships. CRM helps companies understand their customers' needs and solve problems by better managing customer information and interactions, all on a single platform that is always accessible from any desktop or device. As a sales coach and business mentor, I always emphasize on building long-term business relationships and providing exceptional customer service, and it is 6 times easier to sell to existing customers than the new ones. Good customer relationships and having the right tools to nurture them can really improve the bottom line of companies. And as we can see, the products of Salesforce cover a wide spectrum of value proposition to help companies in improving their bottom line. The detailed description of these services is beyond the scope of this video. Feel free to go to their website to learn more about them. In this video, we will be focused on evaluating Salesforce as an investment. In short, Salesforce.com's customer relationship management CRM service comprises several broad categories. For example, Commerce Cloud, Sales Cloud, Service Cloud, Data Cloud, including Jigsaw, Marketing Cloud, Community Cloud, including Chatter, Manufacturing Cloud, Analytics Cloud, App Cloud, Vaccine Cloud, IoT, and Work.com with over 150,000 customers. And it is a company which has been having an incredible impact on the world of business and has a proven track record. Now let's analyze the Salesforce stock through our 14 value-centric dimensions to evaluate its feasibility as a long-term value investment. So as always, I will be interested to see if we can get a score of over 75% over the time frames of 3, 5 and 10 years and see the parallel or correlation between our feasibility analysis and the opinions of analysts. In other words, I will be interested in seeing how well our dimensional analysis converges to the same conclusion as the analysts who have given it a strong buy rating on TipRanks. TipRanks is an awesome tool and I use it all the time to look at the most trending stocks and what analysts are saying about it. But I always have my own criteria which I use to shortlist stocks, and the whole point is to give you that unbiased opinion. Later on, if our dimensional analysis validates its feasibility as a long-term investment, we will look at the current state of the market through the lens of 6 critical dimensions to gauge if it is the right time to accumulate Salesforce.com, or shall we wait for the market to offer it to us for a cheaper price. So let's go ahead and first analyze the Salesforce.com stock via the 14 dimensions of value-centric investment feasibility. For those of you who are new to this channel, I'm Dr. Subayal. I'm a business strategist, experienced investor, investor, award-winning scientist, and also helped the business owners as a coach and sales mentor. So the current price of Salesforce stock is $294 US. The current market cap is $262 billion US. The price to earnings ratio over the trailing 12 months is 111.7. The PEG ratio over the trailing 12 months is 2.6. The earning per share over the trailing 12 months is 4.38. The current price to book ratio is 4.7. The current price to sales ratio is 11.2. And the current price to free cash flow ratio is 50.7. And over the last 3 years, the average revenue growth was 27%, the average asset growth was 48%, the average equity growth was 69%, the average net income growth was 44%, and the average liability growth was 29%. And over the past 5 years, the average revenue growth was 26%, the average asset growth was 40%, and average equity growth was 56%, while the average net income growth was 199%, while the average liability growth was 26%. And now let's have a look at these numbers over a period of 10 years. So over the last 10 years, the average revenue growth has been 27%, the average asset growth has been 34%, the average equity growth has been 39%, the average net income growth has been negative 125%, and the average liability growth has been 30%. And as we can see, the total revenue and net income growth has been quite steady over the last 10 years. The gray bars show the total revenue growth and the red bars show the net income growth. And of course, when we zoom into this graph over the last 5 years, we see the same pattern. And looking at the key ratios, I am most interested in total assets over total liabilities. And as we can see, this blue graph, which shows the total assets over total liabilities, has been staying over 2, which shows that the total assets have always been greater than the total liabilities. And as far as the total current assets over total current liabilities are concerned, we can see that the graph has remained below 1 for most of the time, which is not something which I like. I will like it to remain over 1 for most of the times. And the same trend continues for total current assets over total current liabilities for the period of last 5 years, and same is the case for total assets over total liabilities. And the same trend continues in the last 3 years. And looking at the key ratios, for example, PE ratio, the price to book ratio, and price to sales ratio, I am most interested in the PE ratio and in particular the last 3 years. So over here we can see that the Salesforce stock has never been on sale. In other words, the PE ratio has never been below 20, which is our threshold, and we want the PE ratio to be below that. And looking at the key growth rates, we can see that the total asset growth from 2010 till 2020 has been pretty huge, and it has been increasing year on year most of the times, except 2015. It dropped drastically from 2014 till 2015, but then again it continued its uptrend. Same is the case of total equity growth, and the total liability growth has not been as high as total asset growth and total equity growth, which is a good sign. And as we can see over here, it looks more or less like a linear graph, which is quite nice to see. And we can see that the equity growth has been positive over the past 5 years. And same is the case of total asset growth. And the total liability growth has been there, but not as drastic, which can raise our eyebrows. And looking at the ROE and ROIC, that is return on equity and return on invested capital, we can see over here that except from the period that ranged from 2012 till 2016, the ROE and ROIC have both been positive, but they have not been over 20 or 25%, which we normally look for. And especially in the case of software companies or SaaS companies, I would have liked it much higher. And here is the zoomed in version of the previous graph over the last 5 years. And we can see that from 2016 till 2020, there hasn't been a steady trend of the ROE and ROIC growth. We saw an accelerated growth in ROE and ROIC from 2016 till 17, and then from 2018 till 2019. But then we saw a drastic drop from 2019 till 2020. And as far as the gross margins are concerned, they are huge. So over the past 10 years, they have always remained over 70%, which is amazing. And as far as the EBITDA margin is concerned, it has always remained below 20% in the last 10 years. And as far as the EBITDA margin is concerned, we can see that it has been negative from 2012 till 2015, around that period. But after that, it has not been tremendously high, and it has almost always been below 5% over the past 10 years. Once again, looking into the past 5 years, we can see that the gross margins are again over 70%, and the EBITDA margins, as we can see, they have always remained over 10%, and the operating margins have always remained below 5%. And as far as the diluted shares outstanding are concerned, we can see that they have been increasing steadily over the past 10 years. Same is the case of past 5 years and past 3 years, which is not a good sign. And now looking at the investment feasibility score over the past 10 years, when we look at the 14 key dimensions, we see that we just simply get a score of 50%, which is not good. And looking at all these dimensions again over the past 5 years, we see a feasibility score of just 57%. However, in the last 3 years, we see a good change. We see a feasibility score of 64%. So in the past 10 years, the feasibility score was just 50%. And over the time frame of the past 5 years, we saw a 7% increase in the feasibility score, which is a good sign. And then again, in the last 3 years, when we compare it with the feasibility score of the last 5 years, we see again a feasibility score increase of 7%. So that might be the reason that the analysts are so bullish about Salesforce. And feel free to pause this video and look at each one of these dimensions so that you can get a better understanding of the performance of Salesforce over the different time periods. So we conclude that the result of our dimensional analysis contradict with the opinion of analysts. Since we look at an overall score of over 75%, the Salesforce stock has only managed to achieve a score of 50, 57 and 64% over the time frames of 10, 5 and 3 years respectively. Of course, we see a pattern here. The shorter the time frame or the nearer we are to the current time, the more feasible the stock becomes as an investment. But still, it did not meet our criteria. The most recent the years over which we analyze the Salesforce stock, the higher the score, which shows its strength as a market leader in its domain. So as far as fundamentals are concerned, it is an amazing company. And as you know, if you are subscribed to this channel, before we press the trigger, we look at the state of the market and see the price, sentiment and hedge fund activity to see if it is the right time to buy or shall we wait. So for that, let's go to TipRanks and let's investigate. So the first thing which I look on TipRanks is the PE ratio range. So we can see in 2019, the PE ratio of Salesforce was between 177 around that to around 138. And it simply means that it was never on sale in 2019. So I would have never bought Salesforce in 2019 because it was just too expensive. In 2020 again, the PE ratio range was between 32.45 and 73.43, which again means that it was very expensive during that year and it was not worth investing due to this reason. And as far as 2021 is concerned, of course we have some months to go in 2021, but so far the PE ratio has fluctuated between 118.49 and 90, which makes Salesforce a very expensive stock. And as far as the ratings of analysts is concerned, out of the 36 ratings, 30 ratings are a buy, 6 are a hold, while there is no rating for a sell. So we have an average price target of 303 and the current stock price is $265.28 US. And looking at the price chart, wow. So basically now it is trading at 265.36. But guys, we have to look at the history also. So again over here it was around 267 US. But then look at this. Mr. Market did give you a discount and offered the same stock to you at 205 US. And I think it is going to happen over and over again. So never ever buy a stock at such a high price, no matter how much the hype and no matter what the people say. So price is what you pay and value is what you get. And looking at the PE ratio, I don't think that it is a good value for the money which I will pay right now for the stock. So I will stay away from Salesforce stock for now, even though as a company it is awesome, it is brilliant. And looking at the hedge fund activity, so here we can see that when the price was around 150 or around that, the hedge funds actually kept on accumulating, and now we can see that they are not accumulating at all. So it is good to see that the hedge fund managers are thinking in the same way as me. And looking at the stocks that are similar to Salesforce, I personally believe that Oracle, Adobe, Microsoft, IBM, and Pegasystems have a very different value proposition as compared to Salesforce. Well, they are software companies, but they are targeting very different markets. So actually, I will not bother looking into this information anymore, since it will not be an honest comparison in my opinion. So I will actually skip this information and I will put it as a cross over there in the valuation table. And wow, over here we can see that the insiders trading gives us some interesting clues. So we can see that the sell transactions are always more than the buy transactions, and the extent to which the sales transactions are happening is increasing and increasing. So it simply means that even the insiders think that the stock is overpriced, and that is perfectly fine. Everybody likes to take profits. Smart money always thinks the opposite to the crowd, and that is perfectly fine. So the insider trading suggests that we should not invest in Salesforce stock right now. Therefore, the low score of 20% for the current market state dimensions suggest that it is not the right time to buy the Salesforce stock. And of course, it has a great value proposition, outstanding fundamentals, but I will accumulate when the market presents opportunities, when the stock is on sale, and then I will make it a part of my portfolio over time via slow accumulation. Thank you very much for your time. I hope that you found this video useful. Please subscribe to the channel, press the notifications bell, and select the options all so that you can get the notifications of the upcoming videos in time. I will be releasing such videos on weekly basis to give you a lot of value. Thank you very much. Have a wonderful day. Bye bye and take care. Bye.